main story out of Greece. Eurozone finance ministers are holding back $17 billion in aid until the prime minister delivers on a controversial austerity package. Here with more on what can happen next is Hans Humes. He's the president of Greylock Capital Management. He joins us live from Paris this morning, where he has been speaking with individuals about some of the creditors, some of the risks. Hans, welcome to InBusiness. What is this sense right now about how close we are to a Greek default?
To a Greek default. Well, I think we can certainly, you're not pulling any punches on the questions. You're certainly looking at some form of a reprofiling of the debt. Is that going to constitute a default? I'm not sure. There is a real sense that both the private sector, the official sector, the ECB are all walking on a tightrope with this issue.
Now, I know you were focused very much so on that that threat or that leverage of withholding about half, authorizing only about $6 billion in euros of aid from this next tranche to go through to the Greek government. As a form of negotiation, how far does that get us? How successful are they going to be with that?
Well, I mean, they'll get them through July, but if it's conditional on passing austerity measures, the austerity measures are obviously going to cause some political issues in Greece. And it's always, I think, of concern that you're adding more layers of debt to an existing situation where there's too much debt that needs to be dealt with anyway. And there are so many levels here of potential problems, roadblocks, issues that can be stumbled over between the various interests of the ECB, the European banks, the European sovereigns, the funds that own these bonds. So it's an extraordinarily complicated situation.
Hans, we're talking about the exposure of financial institutions and sovereigns here. What does a reprofiling look like? Can you avoid a credit event?
That's a very good question. What does constitute a credit event? It was interesting that that a few creditors have brought it in front of ISDA that there should be a credit event declared for Anglo-Irish Bank and in Ireland. And in that situation, there was obviously a debt exchange. I think what the official sector is hoping for is something that's voluntary, that does not trigger a credit default swap event, a credit event. And I think the problem in doing that is of the total debt stock in Greece, which is about $330 billion, you only have about $70 billion of credit, $78 billion of credit default swaps. And the majority of that is actually used as insurance for people who have long positions.
Yeah.
So it's a very, very sensitive issue if you do some kind of a reprofiling,
right.
Whether there's a credit event declared or not.